Hi everyone, hope you're all doing well. Today I just wanted to briefly talk about the market and Netflix and talk about their earnings. So yeah, we'll talk about that in a second. I was actually going to make another video, so I might still upload that today. We might go for double upload, we'll see. If not, I'll just put it on tomorrow's video and talk about a certain dividend stock. So yeah, we'll keep your eyes open for that one. But yeah, getting onto the market, not bad, is it? You know, the last kind of few days, maybe a few weeks, it's been a pretty good run. And in that time frame, you've just seen that little bit of optimism come in, that little bit more of a risk on. And this is the thing, you know, this is what we've talked about on this channel all through this tip for the last few months, is that how much negatives is priced in, because we'll talk about that with Netflix. But also, we've seen here like the little slingshot that happens when we have a couple of good days. You know, we have a couple of good days and look how much we bounce so quickly. And that's on a very short-term basis. You know, we're talking a matter of a couple of strong days, maybe even a couple, 2 or 3 actual decent weeks. When you start stringing together a row of them strong days, a row of them strong weeks, you think about the run that we're going to be on. It's going to be good. And that's just a slight little bit of optimism coming to the market. You know, we're not even talking about when we're pushing, new 52-week highs on the indexes, what that's going to mean to the growth stock, when the more risk on is back in the market, when there's a lot of calming down of these inflation rates, when interest rates are calming down. When that all happens, this is a slight taste of what it will be like. And we don't know if this is the bottom. I would be, if I was betting man, as I've said previously, I would reckon we are very close to the bottom now when you look at the negatives that's priced in. But if it does turn out to be the bottom, this is the slingshot that will happen, and it's very much like the CV situation. We went through a period of time where we were down in the dumps, and even for some stocks was like slumping in like June, July, August. Even when we were even coming out that CV situation, stock prices were still slumped down. It was like looking at them going, why are they still slumped down when we see the world opening back up? This virus isn't as what we thought it was. And then all of a sudden, we start having that boom in, stock prices, from, that kind of August time, that August, September, October, November, December, just an absolute slingshot. And, we're very much in the same position right now. And that's all I wanted to say about that. Get on to Netflix though. Netflix, as we talked about on Mondays, Monday's video, it's been a long week. On Monday's video, we talked about Netflix, the first kind of key earnings report I'm looking for, and we did get earnings. Tesla tonight, which is also going to be interesting, and also Snapchat as well. That's going to be a key one to be keeping an eye out on. But Netflix was the first kind of big tech that we've had, one of the fangs that have reported earnings, and it was very key to kind of see the reaction to the market to their earnings. Now, funny enough, I actually talked about this on a stocks to watch list, and I said that this is actually a really interesting opportunity. That kind of like $150, $100 range would be very interesting. And really, since it kind of hit that, that bottom, it's had a pretty good run. We've had a little bit of bounce here. And even today, actually when the earnings came out, we were up 7%. It's had a bit of pullback today, but it's still up 3%. So what has been very key is to see the market reactions to Netflix, and the market was okay with the earnings. In fact, it was probably a little bit happy with the earnings. And that says a lot, because when we look at the earnings here from Netflix, these Q2 earnings were okay. I wouldn't say they were good, but I wouldn't say they were terrible, and they were okay. So if they're okay earnings, why is the stock moving up 7% in after hours? Why is the stock up 3%? Well, Netflix was the key one, because we saw with Netflix is one of those stocks that has so much negativity priced in. This is a stock that is sitting, the lowest it's been since like 2017. I've never seen Netflix trade at, well, apart from the jump that we've had, it was something like 16 times earnings. I've never seen Netflix at this sort of valuation have this amount of drop off. And that's the negativity that's priced into Netflix. And it's very much what we said earlier. Everyone kind of, the market's priced in Netflix to have a drop in subscribers. That's all done now. But what the market isn't considering, what happens if these numbers are better than what is expected? So even though on a normal trading day, or if a normal market, you look at these earnings and go, they're okay. They're not really, normal Netflix standard numbers. when you bring out these numbers that Netflix did, the market's reacting quite positively to them, because that's how much negativity is priced into the market. And that's what's key right now. And when you look at the earnings from Netflix, they actually came out and said their subscriber growth was just short of a 1 million loss. Now, this is better than what's expected. This was going to be a 2 million loss. So that's a very good beat. I think EPS was a beat. Revenue was still pretty good, even though I think it was a slight miss. And the only little really point that was a little bit negative in Netflix's earnings was their outlook. Their outlook was slightly weaker than what was expected to be. But even though with a weak outlook, the stock is still moving very much in a positive direction today. You wouldn't really get that in a normal market. If a company came out and downgraded their outlook, you would normally see the stock slump off that. But the fact that the outlook is, okay, it's not terrible. It's not great, but it's not terrible. The earnings were pretty good. That's why we're seeing the market move upwards. Now, you put into consideration here, what happens if Netflix came out with actually a strong outlook? Netflix could be up over 10% today. And this is just Netflix. How many stocks have we seen beaten down in these sort of share price valuations? There's so much negativity priced in now that when these companies are coming out with, what would be taken as, quite poor earnings, because these earnings were 5 out of 10, the market's priced in 3 out of 10 earnings. When they do come out with these 5 out of 10 earnings, the market's like, oh, that's actually pretty good. And that's the key thing. And the more that these numbers just get better and better in the coming few quarters, and if there's any companies that at the moment carry on, keep smashing the EPS, keep smashing the revenue, keep smashing the outlook, there's some stocks set for, to do really well here. And Netflix was one of those first prime examples we've had of a company here that shows the negativity that is priced in, that shows that, okay, this is why the stock's down, over 70%, because that negativity is priced in massively at the moment. So anything that isn't awful is going to be very good for the market. And this is where we're at right now. So yeah, I think, those that have been capitalizing on the opportunity of Netflix in that $100 range, you're probably going to get the rewards from it, because like I said, you're buying that stock with that much negativity priced in. So if Netflix comes out with decent numbers or okay numbers, you're actually going to be laughing here. The only way that we're going to struggle here is if we have recession type numbers come out of these companies. And Netflix just kind of like showed that they weren't really recession numbers. They weren't great, but they weren't as bad as what people were thinking they were going to be. So that's quite interesting and something to keep an eye out for in this kind of market that we're in and the trend that we're seeing. And Netflix was kind of a reminder of that, how much negativity the market has priced in, and is not looking that bad. Don't get me wrong, in normal circumstances, these would not have been, great earnings. But when you look at what valuation we're priced at and then they come out with these earnings, that's why we're doing okay here. And that's the key going into this earnings season. Has there now been too much negativity priced in, like a Netflix, or are things actually getting a lot worse here? And that's the key thing. And Netflix was the first one to kind of stand up and go, it's not as bad as what people think it's going to be. So it's key to keep watching them. Anyway, thought you would enjoy that video on Netflix, a really quick one anyway today. If you could hit the like button, that's absolutely amazing, and I'll see you on the next video.